Well, we said we were going to talk about financials. So, Nikunj, let's get to that discussion because the other big news yesterday, of course, was ICICI Bank weighing a share sale of up to 3 billion. And that's actually now, I think, about 8 banks that have looked at fundraising in the last 30 days itself. The space has been ripe. So on one angle, you've got the fundraising. On the other hand, as we were discussing, pressure building up, banks definitely taking the heat in yesterday's trade. So, if we were to just identify a couple of the main trends emerging amongst the financials then.
Abha, you got to ask yourself is that why are banks raising capital? And why are banks raising capital right now? These are not the all-time high for some of the stocks. Kotak decided to raise capital when the stock had plunged 25-30%. ICICI Bank, it's not 550, it is 370, 380, where they're looking at raising $3 billion. We know HDFC Limited is raising capital. Mahindra and Mahindra Financials apparently raised capital a couple of days ago. Every bank is trying to raise capital. Why are you raising capital? There are two ways you raise capital or strengthen your balance sheet. You expect that there is going to be a huge, sharp uptick which will happen in the NPA cycle, so that you are raising capital when it is available and before liquidity dries up for whatever reason, at least your balance sheet is protected. There is no liquidity risk. Or the view is that lending is going to pick up aggressively, and whenever lending will pick up, these banks will have capital to lend. I will go with the first assumption that right now banks are not very comfortable, or they do not see a very clear growth highway, and they see a murky picture on the NPA front and again on the collection front. Because you have a moratorium picture, Abha. You don't know how the moratorium will actually play out. You don't know how much, what are the skeletons in the cupboard when the moratorium picture will starts getting lifted. How many of them will pay up? How many of them will not pay up? What will happen on the corporate end? What will happen at MSC level? The government guarantee scheme has kicked in, but how will it really pan out? These are assumptions which every individual bank will have to make. Now, what it means for financial stocks is that one side you've got a situation where fund managers are deleveraging their exposure in financials, largely because of weightage and largely because of the slowdown in economy. So the old owners of these stocks are selling the stock. And then you've got banks which are coming out and they are raising fresh capital by fresh issuance. So what do you have? You have a double squeeze. Supply coming from banks because of fundraising, and selling coming from financial institutions or investors because they want to reduce exposure to banks because they worry about the shape of the economy. So for the stock, it's a double squeeze. Bottom line here, raising capital will ensure that banks will remain under pressure. This is not the previous avatar where banks would raise capital and you would say, they're raising capital and this is going to be growth capital and the price to book is going to be diluted and the stock should rally. No, I don't think this is growth capital. This is strength capital, or this is survival capital. And it's a good strategy, but in the short term, that will cap the stock price.